Well, after Eskom Land Bank has also responded to the Futuregrowth pullout, the COE says that if Futuregrowth has specific concerns about governance and risk-related matters pertaining to the land bank, the appropriate course of action would have been to raise those concerns with the land bank and obtain formal clarification and response prior to the decision. Land and Development Bank of South Africa is a government-owned development bank and one of the 6 state-owned enterprises that Futuregrowth has pulled the plug on. Benny van Rooy, Chief Financial Officer of Land Bank, joins us on the line. How do you view this decision by Futuregrowth?
The decision obviously came as a surprise to us because we were still in the process of having discussions with Futuregrowth about possible extension of further facilities. Those discussions still took place last week. When we were informed of the decision this week, as I say, it came as a surprise. But as a lender, and the land bank is a lender, as you pointed out, we obviously need to respect the decisions of other lenders, of investors to the organisation. And as you pointed out, that we would have welcomed early engagement by Futuregrowth to explain and to hopefully address the concerns that they may have had about the governance of the organisation, because we are quite proud of what we've achieved from a governance point of view. The fact that we have a independent board that's been appointed by National Treasury. We've got a full independent credit committee with 4 independent non-executive members on the credit committee. We also have had clean audits and unqualified audit reports stretching back 5 financial years. We have a very strong credit rating. And from our point of view, our financial results are strong. So nothing fundamentally changed with the land bank or the credit quality of the underlying assets of the business. So the announcement came as a surprise to us.
Now, you provide financial services to the commercial farming sector and the agribusiness. How will this affect the people that's involved with you in business?
Well, obviously, as a bank, you need to raise funding to put yourself in a position to extend loans to customers. So if there's a reduction in funding lines that the bank has access to, it obviously may have an impact on the ability of the bank to extend loans to commercial business and agribusinesses and to developmental farmers. However, the bank has sources of contingency funding available that it can tap into to supplement potential lost debt investments of a fund manager like Futuregrowth.
Are the concerns raised by Futuregrowth on risk for investment valid?
From our point of view, no. We as I've explained, from a governance point of view, we've got very strong governance, independent governance in place. From a risk point of view, we follow diligent processes in our credit assessments of clients. The land bank competes with commercial banks in both the asset and liability space. On the asset side, we compete with agricultural coverage areas of the commercial banks, and therefore our processes from a credit point of view and risk management point of view have to be on par with those of commercial banks. We've also adopted a number of risk management Basel II and Basel III principles over the past financial year. So from a credit and risk management point of view, we are very comfortable with the processes that we've adopted inside the organisation.
Now, I have asked you how this will affect the people that's involved with Land Bank, but how do you see this playing out for the South African economy?
Well, I can only obviously answer this question from a land bank perspective. The land bank is a key supporter of the agricultural sector. The land bank has approximately 30% market share of agricultural debt in South Africa. And in the current environment where there is less appetite for the sector as a result of the impact of the drought, the land bank has almost at times become the lender of last resort to the sector. We are now starting with a new agricultural planting season in the summer grain areas, and if the land bank requires support to enable the bank to continue to support the sector and the industry, the bank's unable to achieve that, one can assume that farmers will battle to produce sufficient yields, and we could be in a situation where an increase in food imports may be required and potentially increase in prices of groceries and commodities at our retail stores.